We are back with our mortgage minutes. I am Kelly Weber of the Weber Group here at Keller Williams and Oradell, joined by David Tirelli of Advisors, and we're gonna build on what we spoke about last week with conventional loans. We are talking about PMI insurance today for conventional loans. And I'm keeping it real because I have questions as we go along the way. I've been in the industry a long time, but it's tricky sometimes. So if you don't understand it, listen, reach out to one of us. So PMI insurance. So if you are putting less than 20% down, you have to carry PMI insurance. No ifs, ands, or buts about it. So let's take this. We have an example here. So a $300,000 purchase price, you're putting 3% down. So they're financing $291,000, correct?
Correct.
All right. So the PMI rate we're using is 0.45%. Now, we're using that as an example here for this purpose.
So, unlike your FHA, which is set 0.85% of the loan for, your annual insurance or your monthly insurance, PMI, it ranges. It goes as little as 0.3% of the loan or up to 1.5%, right? It all depends on your credit score and your down payment, okay? So this is a number, that we're just going to use just to give a good example. It's not set, but again, it ranges,
So for this example, so we have now, after our 3% down, we're mortgaging $291,000. We're multiplying it by 0.45%, which gives us, approximately $1,300 for the year.
Yeah.
Okay, so that's what PMI would be per year. We divide it by 12 to give us, we add it into the monthly payment. So this person would be paying an extra $109.13 towards PMI insurance.
Correct.
In addition to their mortgage.
Yes.
Okay, so again, like we said last week, this extra 100 and let's just say 10,000 goes away once it's become 78%
loan to value
ratio.
Yes.
So that's great news. But we were talking off camera saying this all looks great, sounds great. Everybody always wants to try to get into a conventional loan, but the conventional loan may not be the right program for you. And you use a suit as an example.
Yes.
A suit may fit you one way, but may not fit somebody else the same way.
Exactly.
So
it's important that you put in the right program for you, because even though conventional is looked at as a more prestigious program, it might not be the program. Even though you qualify for it, you have your 620 minimum FICO. It might not be something that, FHA might be a better route for you.
And it may cost them more in the end going this way instead of doing FHA. So again,
everyone's different.
Different, and this is why it is so important to end up with a lender who can explain all this to you and sit down and look at your needs and all of these criteria to see what is best for you.
Yeah.
So again, this is invaluable information, especially for purchasing a house. And
Absolutely.
Thank you again
Thanks for having me.
sharing all this information with us.